Welcome to Punch Card Investing, a weekly show dedicated to all things value investing. Whether it be analyzing companies, pitching ideas, or discussing moves by the best investors in the world, we're trying to get one step closer to punching an investment off of our cards. Let's get started.
Thank you, intro man. This guy has been so consistent for such a long time now. More consistent than us, I must say, just getting the groups together. But we're on a streak right now, guys. I think we've had an episode, I think this is week number 4 in a row, which we were kind of cold there for this spring. So good that we're getting into the summertime, at least here in the northern hemisphere, Tom. And we're getting things going and trying to get back into that good routine. Got the new time again. We're trying out the Saturday U.S. timing, Sunday everywhere else. So let us know what you guys think of that if you're watching live, and if there's some other time that if the old time tends to work better, definitely let us know. We're just trying to experiment with some different things, and like I said, we'll have some more midweek content coming out in the future as well as we get more people. If you are interested or know someone who's interested in participating on the channel, even if it's just a one-off sort of thing, definitely let us know, and you can reach out to us through our socials or through some of the links on the channel. Just send us a message if you're interested, and we'll try our best to get something going if it's the right fit. So definitely let us know there. And before we get into anything else, like, comment, subscribe, all of that great stuff. It goes a long way towards helping the channel. Check out those discount links in the description below for Share Site and Seeking Alpha as well, because that would also go a long way towards helping the channel. Now, we got some news to get to for this episode. A lot of little things here and there. It'd be nice to kind of catch up on. So before we get into that, how you guys doing? When's the last time we had this group together? It seems like it's been it's a while that we've had.
Roman and I are on the opposite sides.
We're all just rotating. So anyways, how are you guys doing?
Pretty good. The new times is interesting for me. Karen and I have swapped the sort of early morning, late night thing. Well, it wasn't.
I've swapped with Jack, and you've taken my time.
Yes.
Yeah, exactly.
Much. I've got Tom's time almost, so old time. So
yes.
You had it pretty good, Tom, I must say.
I did, yeah. If I say anything really stupid at more than usual, my excuse can now be that I woke up 20 minutes before we go live. So there you go.
Yeah. Thinking is clearer then, but talking is harder. Midday, it's balance of both. End of the day, talking is hard. Thinking's kind of hard too. I don't know about you, Karan, but
I mean, I've been through that for 2 years at this point. So I kind of got used to it. But
yeah. Well, anyways, I think Tom, you had mentioned the kind of Berkshire news. I don't know if you want to start with that, but sure. They upped their stake in the Japanese holding companies. So let me pull up that announcement here. The kind of headline is that they increased their average share in each of the 5 companies to 8.5%. We kind of talked about this general purchase some weeks ago now, but I guess they're continuing to kind of funnel money in, although as you can see here that they don't want to take it over 9.9% ownership of the companies of all 5 of them at any point. That's kind of their cap on the ownership of each company. Right now they're at 8.5%, which is up from, I forget where it was before, 7% or something like that.
Yeah. So they bought an initial 5% stake on average back in 2020. That's when this whole thing first started. And they bumped that to 7.4% in April this year. So gone from 7.4 to 8.5 for a few months here.
So it's kind of slowly rolling it in. Seems kind of weird that they wouldn't want to just do it all at once if they're announcing kind of the 9.9% cap. Why not just go for it? I don't know. Is there some strategy here or limitations?
Well, I'm not sure how liquid Japanese stocks tend to be. It is a big chunk of the company, so maybe it just takes time to accumulate. The other thing, Buffett recently publicly did a trip to Japan earlier this year to meet with some of the management at these companies with Greg Abel, which is pretty rare for Buffett to do that. So it sort of coincided with that trip, which coincided with a bond offering that Berkshire were doing,
Sure.
which is kind of an interesting part of how they're potentially funding this whole thing. So I don't know if it's taken just some time to keep issuing those bonds to
Yeah, that's a good
fund the
point.
purchases as well.
Tom, do you know if they've bought this share also with the same structure that they had for the previous tranche?
Run that past me again, sorry.
Have they bought this additional shares that they did buy? Was it bought the same way with the debt that they had done previously?
Yeah,
or?
yeah. So they issued, where I do have it here somewhere. So they issued 164 billion yen in bonds, which I did do the conversion before and have since lost. I think that's $1 or $2 billion US dollars. Someone can do the conversion, maybe. Yeah, they issued that on their recent trip to Japan earlier this year. Higher interest rates than what they got in 2020. Some of the 2020s were like a 0 point something, I think, and out a very long time. They still had one of those. They got 93 of that 164 billion at 0.9% interest, but that's due in 2026. That's one of the shorter dated bonds.
That's a tough deal right there.
But they've got some that go out to, even in this latest, higher rate bond offering. They've got some notes that go out to 2053 at 2.325%. So
that's like literally a 30-year mortgage here in the States.
Yeah.
And I think the dividend yield on these companies is around 2-3%, is it?
I was just going to say that. Yeah, I've got that data here somewhere. One sec. So the
dividend arbitrage, is that a thing?
Well, it's like
pretty much.
That seemed to be one of his main points when he was getting asked about why he bought it. It was like the dividends gone up and the earnings yield was cheap. So yeah, a bit of a range here, but 2.5% to 4%, I'll call it. Maybe an average of 3, a little over 3 across the group. So wild. Yeah, basically his dividends more than cover the interest payments, and then presumably the companies will grow over time as well. He kind of hinted at that in the Japan interview as well. Whereas obviously if you buy a fixed interest instrument with the same yield as that dividend yield, that doesn't grow over time. So
do you guys know too much about these holding companies? I'm trying to think what's the actual downside here. Because there's debt involved, so that adds a little bit of risk, even if it's ridiculous terms. I'm wondering what the downside could be here. Is there some obvious potential risk with these holding companies? As I'm not too familiar with them.
Conglomerates, a huge conglomerate, so I don't think there's. I mean, on a global scale, like they always balance out. I don't think there's much of a downside risk here.
And maybe I doubt there's some regulatory thing on the horizon because they're too big, or get a breakup or something like that. I'm just throwing ideas out there.
Yeah, I don't know the companies that well. My very vague understanding of them is they control most of the imports to Japan.
Sure.
Kind of facilitate that, and by their nature, very diversified. But yeah, that's about the extent of my knowledge. So I'm sure it's possible.
Sure.
I know someone who's done a bit of digging here. I've shared the link in the private chat. Jack,
looking at it now. Which one is it? The
last one.
Oh.
Yep.
Oh gosh.
We're going there.
Yeah, I saw this yesterday. Let's see here.
It's related. So
our man Chamath.
As it turns out.
Says, I was curious about Buffett's ownership in the Japanese trading companies and want to understand why he did it. As it turns out, the trade is really brilliant. He found a group of companies that had very low volatility, grew earnings predictably, and had a good dividend yield, and in most cases, were buying back their stock. But it's what he does next, which is so awesome. He, yada, yada, the debt's really great, kind of what we talked about. So what's left over is near riskless bet where he's borrowed trillions of Japanese yen for free to buy billions of dollars of companies growing earnings in the mid-teens. The only way this trade blows up, I suppose, is if the Japanese economy totally craters. And okay, fair enough.
I would say don't read the comments because
the comments
go in a different direction.
It's all downhill after that.
Yeah, it's all downhill.
Some guys like, didn't you once you compare yourself to Buffett and your track record favorably to his? He said, no, but the media did. Don't trust what you read. And then he got Twitter context.
Yeah, I just want to say the community notes have been a great improvement
awesome.
to Twitter.
They're so good. They're so good. I've never seen one that's missed. They're always like yes, exactly. But the community, for those on podcasts, the readers added context note on Twitter says, in their 2020 annual letter, Chamath Social Capital compared the fund's first 9-year performance with that of Warren Buffett's Berkshire Hathaway. The letter is signed by Chamath, and it links directly to their site.
Wow.
I remember I think we talked about that one long ago when it happened.
We talked about Chris Bloomston destroying Chamath.
Yeah,
I remember that. Yeah,
he was like comparing like 1970s or like 60s.
Yeah,
Buffett
he cherry picked like the end point of Buffett's track record being like in like the bottom of the worst stock market crash in the like 1970s, which was a rough one.
But he threw the S&P up there. I think he showed the S&P then, S&P now, and like, but yeah,
the outperformance.
It was so wild.
I don't know if we want to go too far down this rabbit hole, but it was bad. And even to the point where, he said that he was comparing I think a 10-year record or a 9-year record. And
he got the number of years.
And there was like the wrong number of years in the track record.
It was like chart crime combined with like just cherry picking data. It was like a bunch of things wrong at once. But the letter was signed by Chamath. That was a very important, very important note. But don't believe everything that you read. It's just the media out against him.
Yeah, I must say I've been really trying to stick recently to the whole praised by name, criticized by category thing. So I feel like I failed that mission today, and we should carry on. But
but his tweet about Japanese stocks,
tweet was on point. Yep,
makes sense.
Yeah.
We didn't do it, and also you didn't do it, Tom. I just read the reader's context. The readers did it, so don't worry about it.
Okay.
But all right, I guess that's it on the Japanese holding company. I wonder.
Have you guys heard of anyone else going into Japanese companies?
I haven't heard anything.
I was going to say
investors.
It's one of these things that is like really difficult to clone because we can't issue the bonds and get the leverage.
The same kind of arbitrage, if you want to call it that, is not available unless you're basically. Go ahead.
To be honest, even if you had just bought the stocks, since 2020, you would have done pretty well. I have got that here somewhere. The worst performer was up 65% since that purchase. Most of the others are up 73, 90, 110, and 220% since 2020. So, to do that with free money, I think the bond purchases more or less match the amount of money going into the stock. So it's like,
and there's clearly some sort of
equity and
there's some sort of relationship there that's pretty deep, it seems, and making the trips out there and all that. So I'm sure that plays a role too. And not everyone has access to that kind of relationship, obviously. So I'm sure that plays some factor. But
we do have access to Berkshire, so that's good enough.
Yeah, right.
It will be quite interesting to see whether anything else comes out of this. Like he said in these letters, in these press releases, that he'll go to 9.9%, or he hopes to get to 9.9% and wouldn't go above that without the approval of management. But then Greg Abel in the interview earlier in the year kind of basically said to Becky Quick, like they really like the core investments here, but in some of the meetings, they were kind of wondering whether they could do other deals with these companies, maybe.
Mm-hmm. Yeah,
if they want to spin off some division or something, maybe Berkshire could acquire it. I don't know.
Yeah. Okay. Well, I wonder if they're going to get up to that 9.9% max on any of these next time around. Wouldn't be surprised, I guess, at this rate, especially if they can keep getting the sweetheart debt deals.
Do you guys know what Buffett was doing in like the 80s in terms of conglomerates? Like, are either of you familiar? Like, was he going out and trying to acquire pieces of conglomerates, or like when the whole conglomerate boom was happening at that point? Or was he staying out of it?
Not that I'm aware of.
No.
I can't think of a name.
Okay. This was like back when private equity was basically getting started and everything, and Berkshire was also in the space, but not competing against them. But
Mm.
I mean, I'm trying to draw a parallel, but I guess there isn't any. So
Yeah, not that I can think of.
It's been part-
That was like the Singleton days of issuing
Exactly, yeah.
stock at a public market multiple to buy private businesses at a much lower multiple, sort of thing, right?
yeah, I mean, I'm just wondering, like, is there competition in Japan or is there a lack of competition in Japan that, Buffett sees this as attractive? That's why he's kind of going out after them for spin-offs. And
Yeah, I think it's
I
more
mean,
of
just
it's
thinking
like
here. Yeah.
it's a universe of opportunities thing, I would guess. Like when back in the 80s when they were smaller, still large, but they were much smaller than now. Maybe it was more about there were plenty of opportunities that were more concentrated, maybe had some more upside than something like this. So now, with the universe of opportunities lower, maybe they kind of have to manufacture their way into a great opportunity, like with financial engineering, by getting great debt terms to get there, which they probably might not have had easy access to before, but now they do since they're so liquid and at the same time super large. So maybe something having to do with just kind of that general searching for opportunities and that fit that actually move the needle for them. That'd be my guess. That's why they probably didn't do as many conglomerate type investments before, just because it didn't make sense. But now there's so few opportunities that move the needle for them. Now it does.
I feel like earlier they had deals, but it was not really conglomerate size, like the whole Capital Cities deal, Washington Post, all that stuff, like what's then Outsiders. They were trying to make deals happen in between companies that they owned, but maybe that's what they might also do here. But I mean, we'll wait and watch. Nobody knows what Berkshire's up to. So
yeah,
that's how I'm kind of seeing the whole trade here.
And plus they got more tens of billions coming in next quarter or whatever, and they got to put that somewhere. True. So they'll recoup it with just the existing earnings everywhere else, because they still have plenty of cash. So it's not like like they're having to bend themselves backwards to do this deal, and seeing as though they're getting the money handed to them at the same time.
Yeah, it's not like they need to borrow the money to fund these purchases.
Very true.
Yeah. Man, if we'd ended up going ahead with that punch card SPAC, maybe we could have issued some Japanese bonds.
And that's the investment. Just lever up and then pay ourselves a management fee on the SPAC. And then be like, oh, couldn't find anything, guys.
People would be like, yes, they were pulling up Jamaat's quotes. That's the reason. Yeah. Like, they'll find the link there.
It's like, I don't know if you guys saw that TikTok investors meme of the guy who's like, yeah, I took out a business credit card and then bought myself a watch, and then I declared bankruptcy on the business because it's separate from my personal credit. Or he just outlined generic fraud. And maybe that's what we could do with our SPAC. We form the SPAC, we take out a bunch of debt against it, we take out all the cash, and then we're like, oh, we couldn't find a deal. We've had to pay all of our analysts, and that's it.
Jack, you got to do another TikTok Reacts video. Like, you have to do.
It's been a while. I like to think I should move beyond that, but they are kind of fun.
So let's get back to Buffett and the other deals that he's up to. You guys want to talk about Paramount? Is that a situation either of you somewhat familiar with? I know you talked to Jason about it on your podcast. Have you looked into it after that? Or?
I haven't had a chance just yet. So no, take us through.
Okay. I mean, so recently they had news that they've received an investment of 125 million. So used to the billion. That so yeah, they've received
checking your bank account before this stream.
We keep talking about Buffett, and it's just you can see Buffett, you talk billions. So
yes, yeah.
But so if you could scroll down a bit, like we can take a look at the article. So they've recently received 125 million in preferred equity from this company called BDT Capital Partners. And for those who aren't familiar with BDT, like I wasn't before this news, it's a company that's been formed by someone called Byron Trott. And Byron Trott is someone who's known as Buffett's favorite investment banker. And that's kind of the connection I'm seeing here, because Berkshire owns around 16% of Paramount, and here you have BDT coming in, and it's a situation where likely we're going to see a bit of financial engineering. So because Paramount is looking to sell off some assets and then change a bit of its capital structure, perhaps. So I think that's kind of what BDT is up to here. And I've shared another link that kind of goes through who Byron Trott is. There isn't a lot of information about him, but it's the first bit of the article, it is paid, but if you just scroll, you can like read the entire article without.
Oh wow, yeah, that's kind of funny.
It's a glitch.
Some might call it value investing.
Yeah,
So
you
here
can really see
there's
it.
something. The reason like Byron Trott and him, Buffett have actually kind of formed that connection is because initially Buffett had asked Byron Trott to create a new type of security for him, which would have basically let Berkshire borrow money at a negative interest rate. And if like Byron Trott tried to create that, but eventually they didn't decide to use it because it was diluting Berkshire shareholders. So it's a whole thing, like it's in the article. If someone's interested, they can check that out. But there's something interesting happening there, and it's an interesting situation. Yeah.
Does it no, you're not. Wait, you're in Paramount. No, you're not in Paramount. Are you in Paramount?
I am.
Yeah, you are in Paramount. So yeah, I was mixing up. Anyways,
In Warner Bros. And Paramount. Yeah.
do you does this make you more optimistic then, or does it change anything?
I mean, yeah. I mean, the fact that I see it as Buffett in the 80s and 90s, like coming, like this is a similar sort of thing. So this is not the first time he's gotten into a company and just on the cusp of them kind of starting this whole financial engineering. So I draw a huge parallel to this situation and what he did in what he was part of in General Dynamics. So that's another company, I think in the 80s, and it's covered in The Outsiders, where they started selling off non-core pieces of the business and then eventually streamlined and focused on, I think, 2 divisions of the business and then just grew that out. Eventually there were buybacks. So a lot of financial engineering, selling off the non-core assets. Very similar story to what's happening in Paramount here. So that's kind of the parallel that I was drawing with Berkshire and BDT and all this, everything that's happening behind the scenes.
Or in Buffett's words, streaming's a terrible business, but we'll see what happens.
Yeah, I was gonna say we'll see what happens.
Yeah.
The best part here, it really doesn't matter what happens after 2 years, 3 years, as long as they figure out the non-core assets, they get a good price on it. You can do a lot because the debt they have is really long-term. A lot of it is fixed, some of it is variable. Pay off the variable, maybe do some buybacks. There's tremendous value here. So it seems like a very typical Buffett investment.
Yeah, this makes you wonder if this is actually more of a Buffett play then, and not just Ted or Todd.
Very likely.
Yeah,
It seems a bit like it, yeah. It's weird for him not to just deflect and say it's one of the guys in the office, you know.
If I see Apple buying any of the businesses of Paramount, he's doing exactly what he did between Capital Cities and Washington Post, where he saw that Washington Post was able to get needed to diversify in a certain way and then take on some assets, and Capital Cities had to divest some of the assets. It's exactly the same thing. It's like history repeating itself, and Buffett's there and he's running the same playbook. That's how I see it, at least. That's what, like, if anyone else was into the stock, it would be a good conversation. But I mean, hopefully someone in the chat. Yeah.
Well, but Apple seems to be in far less of a desperate situation now, or you know.
But they are growing their media business. So
and true, yeah, I guess so. Yeah, they would like that. Yeah.
Tim Cook is in Cannes. I don't know how you pronounce it, but CANNES, the whole film festival.
Mm-hmm.
Like the CEO doesn't show up to a film festival unless they're really going all into media.
Well,
So-
you would think.
Yeah. I mean,
But yeah.
so there's an interesting partnership there, and It's not the first time Buffett's pulled off something like this. So I think the next 6 to 12 months are going to be really interesting for Paramount. Yeah. Irrespective of what happens in the long term, like if they do continue to pursue direct to consumer or not, I think it's going to be an interesting situation.
Nice.
Certainly a large situation with billions involved, not millions.
Yeah.
Karen, do you have any take on Berkshire buying only? I think they've only bought non-voting shares to date, right? Do you have any thoughts on that?
Not particularly. I mean, the main thing is that I think 80% of the shares are controlled by the trust. So,
okay, so it wouldn't make any difference anyway.
I don't think so. I mean, I think Berkshire, if he was getting in, I mean, it would be with the intention that, you know, something is going to change. It's not with the long-term prospects. I don't think so. Because again, like I'm kind of seeing the investment in General Dynamics. Like when there was a potential for value to be unlocked, that's when Buffett was there. He was there for 3 years and then he got out. He didn't care about the long-term success of the business. He just needed that initial value unlock with the huge buyback that they had. They had like, I think a buyback of, I think 1/3 of the company or something like that, 40% of the company. He was there for the buyback. Once that was done, he exited the position and he said in hindsight that was a mistake, right? But clearly, like he's not willing to take a risk. He's going in with that margin of safety. He's just getting that investment return and heading out in that situation. So maybe he might do the same thing here. So I don't think it doesn't matter if he has voting or non-voting shares.
Has he commented on management for them yet? He's commented very little about this whole thing, right?
Not at all. I think he's being extremely tight-lipped about the situation because he is the one making the changes. And there was this like very old interview somewhere. I think it was one of the meetings where he talks about that, you know, like I don't want to share investment advice. I'm not in the business of like explaining to people why I'm buying into something. So
yeah.
True.
So he's like, I don't want to explain why this is a good situation. In fact, I want people to think it's a bad situation. So they kind of stay away from it. And he can get a good price. So I don't know. It's very interesting. It's like, I feel like I'm reading a chapter of The Outsiders, but like in present time with this whole situation. It's just interesting. Yeah.
You guys, we got our very first ever. It's a new thing here on YouTube. It's a super sticker from YouTube, because we have a membership available now on YouTube where you can contribute each month, and then it gives you access to stickers or something. And you have a couple custom emojis you can use too. But we might eventually expand out that membership system to offer exclusive live streams or events or something like that in the future. We'll keep you posted when that changes, but it is available on YouTube now if you're looking to support the channel, as our man Luis has done here. What is that sticker? As I don't think we can see it here on stream.
Yeah, I've just brought up the stream. It's a mustache.
It's the Monish mustache.
I would think that's the connection. Yeah.
Yeah, that's the custom one that I created. I can't see it, so I assume it's that one. Is it black?
Nice.
Yep, that's it. Nice. So appreciate it, Luis. You were the first ever to use one of the custom emojis. I guess they call it sticker on for the channel. So thank you.
Gracias.
He says buenos dias.
Yeah.
Leonard has a question for you, Karan. Did you get into Paramount before or after Berkshire did?
Much after. Like I got into it pretty recently, like a few months back. Yeah. Pretty much at the lows. I mean, around 17-ish. That's my cost base.
Weren't you doing a pretty big rotation in your portfolio at that time? And if I'm recalling correctly, about the same time you entered.
Yeah, I mean, it's been a lot of averaging out the positions. There's a lot of changes. I've added like another Chinese tech stock. A few more changes. One surprising change. I'm pretty sure people are going to have some comments like in the next monthly update. But
are you keeping that close to the chest, or can we know?
I mean, it's on eToro, so if someone's interested, they can do a little bit of digging. So it's all public.
I see. So it sounds a bit like a sales pitch to me. You can't see. You got to go to my.
They're on eToro. They're on Twitter now. So I mean, They're partners.
You got to go to my eToro page, and you could see
It's
everything.
useless for the US investors, so I mean, it's okay.
Yeah.
Yeah.
But all right.
Well, speaking of you brought up the Chinese tech thing there very briefly, Karan. Did you want to take us through the Alibaba news this week?
Sure. Jack, we've got the picture, right?
Yeah, I've got the announcement and then the picture you shared too. So
Sure.
They're announcing a chairman and CEO succession plan. So they're going through a lot of the kind of higher level organizational changes, as we've talked about a little bit over the past couple months. But they're planning to spin off a bunch of business segments and set up the leadership for that. And I guess they're doing a CEO succession right now. But here's kind of a map of what's going on, I guess.
Sure. So let me just pull up. So both Joseph Tsai and Eddie Wu, I'm probably butchering some of their names, and I actually can't remember their actual names in Chinese, but they are both founders of Alibaba. And as I understand, Eddie Wu was the initial, I've got a list of like his roles in Alibaba. So initially he was a technical director in 1999. Then he's gone on to be Alipay's CTO in December 2004. He's become, at some point in 2005, 2007, he was the director of Alimama. And then in 2008, he was the CTO of Taobao. In 2011, he had taken over the advertising and mobile business. He's moved on from that to be the director of Ali Health from 2015 to 2021. And and then he was just on the board. That's it. And now he is the CEO of the Alibaba Group, and more specifically Taobao Tmall Group. So you've got like the original founders back at the helm, leading the core business, the main cash cow in the business. And the current CEOs kind of moved on to Aliyun or Ali Cloud, which is the high growth segment that, people have said might actually be worth more than all of Alibaba at the moment. But, that value is yet to be seen. So, Tom, I know you're also a Baba shareholder. Do you have any thoughts on this?
No, I've been a bit out of the loop this week. I had your message in our Twitter group was literally the first time I heard this. So, no, I'd completely missed this one, to be honest. But interesting changes. I wasn't fully aware of that background of Eddie Wu. Kind of surprising news, though. It seemed like Daniel Zhang was kind of going to be, I don't know, continuing on with a couple of roles, like with the cloud role and then Alibaba more generally. But I guess not.
I mean, we're seeing a lot of shuffling throughout the tech space where, we've seen the CFOs kind of take on the CEO roles. We saw that with JD also recently. And in a lot of cases, the founders have taken more of a backseat or more of an advisory role. Like even we've seen pictures with like Jack Ma and Daniel Zhang and everyone, like he's going around, he's on the ground basically in China, but it's more of an advisory role. And there were some reports that he had an internal meeting where he told them, focus more on Taobao, focus more on small to medium businesses. And Tmall, I guess, is kind of transitioning into being more of a business focused in Europe or something. Like there's a lot of changes happening there. So I guess they're doubling down on what has made them successful, like over the last 20 years or so, which was focusing on small, medium businesses through Taobao. It's a good sign.
Yeah. It's going to be very interesting over the next few years to see if Alibaba can actually start growing again, growing revenue, that is. They've become quite a bit more profitable this year, but a lot of that seems to be cost cutting. Probably costs that it sounds like shouldn't have been there in the first place, I must say. Like, and a lot of their, heavily loss-making businesses. But yeah, revenue growth's been quite lackluster.
That's the cost of growth, is you get a lot of waste in many cases once you get to scale like this. I just ask big tech.
Yeah.
There's a comment here from Thomas, I think. It's like on the right side. they forgot Ma, which they forgot here. Yeah, they forgot about Ma above the two heads, the largest shareholder, restructuring architect. I mean, Thomas, have you guys seen his videos?
No.
Thomas Hayes. He's the guy who had that video about Alibaba as like a submerged balloon or something. And he was comparing it to Microsoft back in 2013 or 2014. He's a bit optimistic, like he's very optimistic, but always good to listen to. He has like a weekly podcast or show or something that he does. It's on YouTube. It's interesting. I mean, he's got a lot of good ideas. Apart from Alibaba, he's got like 3M and Vornado in the commercial real estate space, Generac. I don't know. It's just something interesting if the audience might like that. Yeah.
Cool.
I just dropped him a follow. I was not following before.
Jack, have you ever looked at Vornado? VNO?
No, but yeah, I'm actually looking at Generac right this second since you mentioned it.
I think Generac is something Jason was in at, and he was interested in at some point. I remember him mentioning it, but
I think he mentioned to me that he bought a Generac for his house, and I just got a quote for one as well. So he's in tornado land, and I'm in hurricane land. So like we need these sorts of things. So or it's helpful to have at least. But I didn't realize they were publicly traded. They're an $8 billion company. At least as of now, with 33 PE. But you know how earnings calculations are. So let's see here.
You can ask them if they give shareholders discounts, maybe.
Yeah. This price and install have to be pretty expensive, but I wonder what the margin actually is on these things. But anyways, you were mentioning Vornado though. I am not familiar.
I don't know. It's in the commercial real estate space, and it's one of the. I think it was started in the 80s or something. 85, 86.
Yeah, but I've really only heard the name. I'm not too familiar with like operations or anything.
Right.
And Generac's down.
Do you have any thoughts on the commercial real estate space? Like, I mean, I know it's.
Oh, I have thoughts. I don't know how helpful they are. But what do you mean?
Priced in?
Well,
like, is it all doom and gloom ahead, or?
I just my response for like macro real estate things is always that the whole industry is a stroke of a pen away from surging or collapsing because it's all so heavily subsidized in the States, at least. The Fed owns like half of all commercial real estate debt. Residential mortgages, way more than half of them are directly subsidized by the federal government, who then buys them afterwards, and the Fed ends up owning a lot of those too. So, if the Fed decided, hey, we want to collapse the real estate market, they could do that on a dime. At the same time, as we saw in like 2020, if they want to pump it up, they can do that too. So I don't know. It's hard to predict either way. But right now, all I can say is that even with the relative cap rate expansion we've seen, debt levels or debt rates are still pretty high. So you can't have cap rates below interest rates for very long and expect prices to hold. Something's got to give. Either rent's got to rise or prices have to fall for that to make sense. So, what happens there, we'll see, but it's not sustainable when it's like that. And there are still plenty of markets that are like that. Although it doesn't seem as frothy as it was just a year ago. Just ask Seritage about that.
Tom, have you been in touch with David or anyone about Seritage, or has there been any updates?
Not in recent times, no.
I remember hearing that they did pay down some more debt, but I think that was like a month or two ago.
Yeah, I've been following some of the press releases. I mean, they continue to sell properties and pay down debt. I think they're at about 50 properties or something now. But yeah, I mean, a lot of the same things remain true. Like they're becoming decreasingly leveraged over time, but still they've got some leverage built in. So small change in asset values, big change in equity, both directions, whichever way those asset values go. And yeah, it's interesting. It seems like they'll end up with a small number of their most valuable properties. So it'll be reasonably heavily influenced by how how well they can sell those, basically. But no, I've been following at a high level, just press releases and stuff, but I haven't done any property level valuations or anything.
Yeah, you're out of it, right? Completely, like sold out.
I don't think does anyone hold it anymore in our group?
It's in the punch card portfolio.
Yeah, besides that one. Should we vote? We haven't done a vote in a while because we haven't had the full group.
But we need to add something.
Yeah, we should. Is there anything that you think should replace anything in the portfolio? I assume there's something that for all of us it's going to be above Seritage. So, maybe we should call a vote on something.
I think by the time we decide something, Seritage might just liquidate entirely and just like be cash in the portfolio.
Yeah, right.
Yeah.
But anything that comes to mind though, that we should maybe have a discussion on a future episode about.
Lots.
What do you got, Tom?
Well,
He's going to
if we're going to have a discussion on a future episode, let me narrow it down a bit, maybe. But
Well, throw it out there. What do you got?
it's going to be all the usual stuff. It's not anything too exciting.
It's Thor, isn't it, Tom?
Thor?
It's Thor.
Your words, not mine. Okay.
It's the cyclical bottom. We got to get in right now because it's going to go to the moon.
Well, hey, it's doing okay this year. Recent earnings were
Very
pretty
nice.
good. Well, compared to expectations, they're down a fair amount versus the couple of boom years. But
Have you been following the banks? I know you were into Hingham. I'm not sure if you still are, but
Tom
I've just stopped hearing about regional banks.
Tom had a bank phase before it was cool. Then everyone had a bank phase.
yeah, no, I'm still following Hingham pretty closely. They Hingham's got really interesting because they're getting super squeezed on just their funding.
Right.
Their funding, the liability side of the balance sheet. So they're going to have a pretty ugly couple of quarters, at least, I would say. Be interesting to see how they come out the other side of that.
Cool. Is there anything that either of you are looking at the moment? Like with
Just because I've been kind of playing around with the Generac. Here's their free cash flow for Generac. It went negative for some reason. I don't know why. This is the first I'm seeing anything about Generac, but massive surges in 2020 and 2021, followed by a big crash. But I didn't see like a big increase in capex. This is like the whole. So I'm curious what happened to their cash flow. Why it just bottomed, unless there's just demand being pulled forward for a couple of years, which could be the case. But capex was actually fell from 2021 to 2022. So curious.
These guys like purely diesel generators sort of products.
Yeah, diesel or not diesel, but propane and natural gas. I think they do diesel as well. I got a quote for a natural gas one, so it just hooks up to your gas line. But let's see.
Right.
Generators, air cooled engines. Yeah, they probably do diesel too. Then liquid cooled. Yeah, just any kind of generator you can think of. Yeah. So yeah, I'm curious there. They've been around since 1959. And at least the model I understand is kind of what it exclaims down here: distributes its products through independent residential dealers, industrial distributors, and so they're not actually doing the install. They're just they're almost like a franchise sort of model, is my understanding, where you'll have like a dealer who's authorized to do Generac products. They send it to them, or you send the generators to them, and then that independent dealer will install it on their own. I don't think Generac gets a cut of the install price, but they sort of wholesale it to all these independent people who then resell them to install. It's my understanding, but just being on the customer side, that's how I think it works.
They don't have franchise shops or anything, you mean? They just have a bunch of authorized dealers.
Yeah, it's like authorized dealers is how I understand it, and I think that's how it works. I went to their website and it's like, put in your zip code and your info, and then send me 2 quotes from authorized Generac sellers in your area or something like that, is what it was like. So I imagine it'd be sort of capital light. I mean, they have to build these generators, which isn't capital light, but it's not like they have a bunch of stores everywhere or something. I would think. So, anyways, I'd be curious on more with that and why their cash flow got destroyed.
Yeah, you'd think there wouldn't be a lot of reinvestment into like R&D.
Yeah, that's what I mean.
And,
it's like you build a generator, and that's kind of it.
Yeah, it's not like some car, some car brand where you got to retool your factory for next year's model.
Right.
All the time.
Right. It's a lot of the same models, I'd guess. And I guess maybe if they're doing a solar kind of integrations, maybe that would change the deal. But yeah, even so.
Do you buy generators often? Like, is it a thing you buy every 2 years, or
no?
Is it like, well, it's good for
this for like a whole home generator, which is like a lot of what they sell. Those will last 20 plus years. Just got to maintain them almost like a car. That ideally you're not using too often, right? That means your power's out. But yeah, they last a long time. At least the whole home ones. Maybe some of the smaller ones less so. I am speaking as a layman here, so I'm gonna be careful not to say too much. For my limited research, for my own use, they do last a while.
It's a Peter Lynch situation. Like, you look at the product and then you.
Yeah, right. It seems like they go to. I don't know of many other brands that do that. They seem to be pretty dominant in that space. And they all. One thing that happens a lot down here in Houston, where tons of people have generators because of storms that happen every now and then, usually during the summer, or rolling blackouts if everyone's cranking their AC when it's 103 degrees Fahrenheit. Like these dealers or installers will come through a whole neighborhood and like try to do like, hey, we'll do all of you, or like if we get enough people to join on board, we'll give a discount on the install for everyone, kind of like a group discount if you get the whole neighborhood on. So I guess that's pretty common down here, where they'll try to bundle it sort of for a whole neighborhood. I'm not sure how it is in other markets, but certainly in a market like this where there's a lot of demand, they seem to be the go-to. I haven't heard of other companies doing that, or other companies using other brands doing that. So I don't know. Seems like it might be worth a look if you can figure out what's going on the cash flow side of things. It's been around for a while.
I know nothing about this company, so might be something to look into.
I'm assuming you're not in the market for generators, Karen.
And not really.
Not something you need to worry about.
Power grid concerns are probably the least of his concern.
I mean, we don't get calamities, touch wood. Like the worst thing we get is like a sandstorm. So
sandstorm, and you got unlimited fuel in the ground.
That helps.
So there you go. That's one quick aside. When I was in Illinois, a huge part of their grid is nuclear. Which I never appreciated until I moved out of the state, as Texas doesn't have any nuclear. It's actually, I think, a third of the grid is like renewables. Even though Texas is described as this big oil conglomerate, but there's plenty of oil, yes, but it's not like what people say. But the nuclear advantage is great for just like consistent energy, avoiding rolling blackouts because it's super efficient compared to others. But I'll get off my soapbox on that now. I would like some nuclear down here in Texas.
Maybe one day we'll have an episode on energy companies when we actually figure something out about this space.
We talk about commodity businesses in general. It's just kind of tough because it's tied so closely to the commodity price, and then we want to be careful not to be like trying to guess the future price of the commodity because that's a whole macro game. A lot of the time, I feel like you just have to kind of get over that. Otherwise, you're not gonna go anywhere, right? Am I wrong to think that?
Seems like.
All right, I'm totally right. Amazing. Anything else you guys want to talk about before we wrap up? Any other stocks or things you're looking at? Any exciting trips upcoming? What's going on?
You got something, Tom? Are you doing something? Are you too busy with
No,
obligations?
absolutely nothing.
No fishing trips?
Well, yeah, maybe. We'll see.
There we
Yeah,
go.
yeah, mate. Yeah, definitely.
Well, I'm within just weekend driving range, now, so
Nice.
it doesn't require quite as much planning.
It's just a given. Don't even need to
Yes.
think about it anymore.
Just a way of life.
Yes, exactly.
Do we have any questions that came up? Or
Someone's asking
not
where's
much of a live audience at this time. Yeah.
No, we it's pretty close to what we've had before at the other time slot, just a different crowd, which is nice. You get to
More
mix
introverted, perhaps.
No, I don't know about that. Sometimes the chats are sometimes more active, sometimes not. But someone's asking where's Frank, and that's a great question. But he's definitely has some scheduling conflicts with.
He's training Elon Musk. Guys.
Yeah,
Well,
let's get it out.
Our new start time is 4:30 a.m. for him.
Yeah,
so.
but the old start time wasn't working for him either. So it's like, well, in the meantime, while we try to figure something out, unfortunately, it's just not going to work for the foreseeable future. But doesn't necessarily mean he's out for forever. Just for this time period, though, it's going to be very difficult. Anyways.
Well, Luis brought up something. We're almost at 4,000 subscribers. So
yeah. I think we were at 3,996 at the start of this episode. So who wants to be number 4,000 if we're not already there? Very much appreciate it that we've come all this way for a couple of years into this show and managed to put together this cohort of 4,000 people, which is pretty cool.
Better check I'm subscribed. Yes. Okay.
Yes. And then just regarding kind of future scheduling, Luce is asking this as well. We'll probably this is sometime on midday Saturdays in the US is probably going to be our go-to live time for most of the time, but we'll probably do occasional previous time Friday nights in the future as well. So it'll be a mix in the future, it would be my guess, but we'll run at the Saturday time for a while. Come daylight savings time, who knows about all that, or when daylight savings time ends here in the States, that throws a bunch of things off. So we'll wait for that. So yeah.
Cool.
And we
have another super chat.
A super chat from the is this the other Luis with the super chat? Appreciate it.
The Luises are representing in the
yes, we got multiple Luises in the
department.
chat with super chats, super stickers.
Yeah.
Tremendous. Anything else, guys?
Good.
With nothing said, thank you everyone for stopping by. We'll see you all in the next one. And before you sign off, be sure to check out all that great stuff in the description below, the discount links, the Discord, and also be sure to like, comment, subscribe because that helps us out a ton. But otherwise, we'll see you in the next one, and stay tuned for future midweek episodes as well. If you subscribe, be sure to hit that bell icon as well so you get notifications whenever we do go live or whenever new episodes drop. Sometimes we'll do premiere episodes so you can actually get in a live chat, even though it's not a live stream. So check out that as well. And one more pitch for the memberships too, since you get access to some funny stickers and stuff, and we'll try to add more as time goes along. And try to add some more membership perks as well with different levels. So check that out on YouTube. We're just experimenting with that for now, but either way, it helps out the channel if you sign up for those. With that said, thanks everyone, and until next time.
Thanks for tuning in to Punch Card Investing. The contents of this show should not be used as investment advice or as a recommendation to invest in a particular security. Please consult with a licensed investment advisor if you need investment advice. All investments carry risk and the potential for monetary loss. Thank you, and see you next week.